Hi, I am Sashwati Sarkar and you're watching The Times of India. Today we are diving into an urgent conversation. How rising tuition costs, rupee depreciation and evolving visa policies like the OPT rollback are reshaping the future of education financing for Indian students. We'll explore the rise of embedded finance, the role of AI in smarter loan assessments, and how to avoid falling into a lifetime debt trap while studying abroad. Joining me today for this conversation is Mr. Prashant A. Bhonsle, founder and CEO of Kuhoo Finance, a leading voice in reimagining student financing for a new generation. Welcome to the show, Prashant. Prashant, the rollback of OPT provisions in America is sparking anxiety among international students, especially those counting on post study work to repay their education loans. How do you think this will reshape loan structures and risk assessments for students headed to the US?
Thank you for having me. I think very significant shift uh, in the approach by the US, and it does have huge impact not only from the lender side but also students and almost every stakeholder actually, because almost everybody that I've known in last 15, 16 years, or more than 50% of my experiences is in student lending and largely into the Indian students going to the US. Um, Most students that I've had interactions in last over a decade who have either gone to or are aspiring to go actually have one single thing in mind, that once I pass out of the course, I'll get a job. I have a provision of 1 + 2 years of OPT. I will be able to plow back some money. I'll get some ROI on my investment and so on and so forth. That's on the student part. I think it will have sentimentally and economically both large impact on students and parents, and must have also, because a lot of these parents and students come from middle class families, and the
Absolutely,
only
absolutely.
only source is that they will get this thing. But on lender side, uh, uh, it is one of the most important credit assessment tool was OPT, and H1B after that potentially, right? If OPT is not there, that means 50,000 to 75,000 or $100,000 cost of education. Uh, if it has to be serviced, and if you've taken, let's say, 50, 60, 70, 80% of the loan, if it has to be serviced, about 30, 40, 50 lakh rupees of loan needs to be serviced to an INR salary, or they need to come back and then get a job and start servicing that post their course. Almost impossible, because the salaries are not going to be equivalent, because they will earn in dollars there once they start working, but they'll earn in INR here. So it cannot be equivalent. So it will change the loan structures drastically. It will go back to pre 10 years back era according to me, where uh, parents' net worth used to be the primary criteria of lending to students wherever they're going. Over the period of time, thankfully, for the students and talented Indian students who came from humble backgrounds actually had this opportunity now to go and take loan and pursue their dreams of higher education, because lenders found out a way to evaluate their potential rather than their parents' salary and income and bank statement and net worth, which is going to change now according to me. And putting a number on potential employability and income on an Indian salary is going to have a negative impact on their loan eligibilities, and which will in turn have their a negative impact on their ability to then find ways to fund entire education, including cost of living. So my sense is it is in a lot of sense tectonic shift uh, from students, parents, lenders' point of view.
Right, understood, understood. So this is sort of this is an alarm bell for students, we can say, right?
A lot of it, actually, more than it's a siren, according to me. More than an alarm bell, yeah.
So, with the double blow of soaring tuition fees and rupee depreciation, many Indian students are entering what experts call a study now, pay forever cycle. What early warning signs should students watch out for before taking education loans?
Uh, Few things they should almost immediately do. Uh, they they should start exploring opportunities within India while they are evaluating study abroad programs. According to me, uh, top 10% or 15% or 20% of highly meritorious students might still get some tuition fee waiver or scholarships or grants from the universities abroad. And if that happens, I think that's going to be very helpful for them. For a lot of students where the grants and scholarships or tuition fee waivers are not forthcoming, uh, I think they should then evaluate lower cost options, either other countries where they may have some opportunities to work or work permit post their course, or my strong preference is start evaluating Indian education, universities and colleges. Work hard, competitive. It's very competitive, I understand. However, if you are not able to get the money back, as you rightly said, if they get a very large loan in which they have to service on their Indian salary and Indian jobs, I think it's going to be a very, very long, debt-ridden journey, and you don't want to start your life at 20, 22, 24 with a large debt on your head, which you will service for a very, very long period of time. It actually will postpone a lot of your life decisions. For example, what I understand, the student journeys who have gone abroad and started working there, their life journeys are very different. They start earning. Normally, the loan offered is about 10 years, and then they start getting dollar salary or pound salary and then start paying early. So most loans, if they were getting a job there, will get completed within 5 or 6 years, or including the course period. Now that if that doesn't happen, and then after that they can start saving money for their family, for their own home, for their car, for a lot of other lifestyle things, which I think will get postponed now, their marriages and everything. It has large impact on other events of the life which are significant in their milestones of life. So according to me, they should evaluate Indian options. They should not completely get carried away. Watch the situation of geopolitics very carefully. Maybe defer
Yes,
their
that's very
decision for a
important.
year.
They should carefully evaluate and critically assess the geopolitical political situation globally before choosing a country. That's a very important piece of advice.
And also, maybe if not completely give it up, maybe defer it for a year or two and see how the situation is playing out. Maybe it will turn around. Maybe they see the importance of Indian students. The Indian students are important for that ecosystem. That also is there. They do not have that kind of skills getting generated locally. So while it is more political and protectionist approach of a lot of governments across the world, but eventually, if they need to drive innovations, they need Indian brain, so to say. And with Chinese going down post COVID, the Chinese student visas have gone down drastically. India is the largest pool of talent that US, especially, and any other country in the world with aging population can actually bank on. However, with the new policies, that seems to be a bigger challenge. So it may be a good idea to defer your decision, evaluate doing probably working if you have already passed out of your undergrad studies in India and you're going for postgrad, then it may be a good idea to work for a couple of years here in India and then start looking at uh, uh, how the situation is playing out and then take an informed decision. And but go with whatever decision. Also, one very, very important point I want to actually also say is that there has to be a mathematics around it. If your family's net worth, if the cost of education is more than 10-15% of your family's net worth, then you need to be very careful, because if ROIs are not going to come and your parents have actually mortgage, so to say, their terminal benefits like their retirement income and everything against your future education, and that's not going to happen now, the ROI, then it's not your impact only on your career and your life, it's also impact on them because they are using their future money, their retirement money to fund your education, right? So that's another advice that
Right. So they have to tread a very cautious path.
very, very cautious, yeah, especially in the light of this thing.
Yeah. So embedded finance in education, is gaining traction. This is where students assess loan eligibility during the application process. How do you see this model evolving, and can it fundamentally change the way students plan their study abroad journey?
Uh, Very, very significantly so, I believe actually. This is, according to me, it is going to be, in my sense, if I were to hazard a future prediction, in my sense, this is going to be the way forward. And this is going to be the right way forward too. Because what is right now happening is most banks and lenders actually in India especially actually start accepting the loan application only after the admission confirmation is done. Now, take an example. If you're going to US for fall of 25, okay, fall of 25 is June, July, August session, right? Uh, if you're going for fall of 25, your journey of admission is started at least 8 9 months in advance, which is October. You start evaluating universities, start applying to them. After about couple of months, you start getting conditional offers, and then conditional admission offers. You need to submit future proof of funding, how you will fund education and net worth certificate and all that. So this takes about 3 4 months, and then once you get the confirm admission from the university, then only the banks will start accepting your loan application. Now this is a chicken and egg story. Now when you start planning your education, some money comes, especially from tier 2, tier 3, tier 4 town with per capita income of 24, $2,500. Uh, and if you remove the top 2, 3, 5% of the people, it drops down to less than $1,000. That means you will have to get a loan for your foreign education, right?
Right.
If that is going to happen at the time of planning, you need to know how much of money out of, let's say, $100 of fees or cost of education, how much of money is going to come from my family savings, how much is going to come from my loans, how much is going to come from, if at all I'm a meritorious student, how much is going to come from tuition fee waivers, grants, scholarship, and so on and so forth. For 95% of the people, it will not be available, the third option. So these two options they need to take care of, right? At the time of planning, if this is available to them, this information, that out of $100 of total cost, I am going to get, let's say, $50 of loan as eligibility. Now then I know months in advance when I'm planning that I need to take care of the rest of the $50, right? Rest of the 50% of the cost of tuition as well as living expenses, and then probably account for rupee depreciation further during the course period and all that. All of these things I need to plan. If I plan it in the month of October when I start my journey of application to university versus when I'm doing it in April, it's very, very different, significantly different. It's actually can derail your entire career planning because at the last moment, if the loan doesn't come through, you've actually wasted about 8 9 months. And then, so embedded finance, according to me, is the only way forward. At the time of planning, if the family knows that this is my eligibility, right now any lender takes anything between they start the journey much later in their application period, which is by design of the lending institution. B, it takes for the lender also because the embedded finance is not there and lenders are not as advanced technologically as they should be. Uh, uh, they will take anything between few days to few weeks to tell you whether you are eligible, and if at all you are eligible, how much you are eligible for. So according to me, embedded journey is the way forward, and with new technology and AI and data science, this is very much possible. Only thing is the specialized lenders who understand the potential employability of course, university ranking, match it with the student profile, their parents' profile, the sectoral employability potential for next 10 years. All of this information needs to be available with the lender, and that's why education loan is a specialized play. And that's why if you go to a specialized player, it may be a better idea for students and parents because they'll get the right information at the right time.
Prashant, AI is being used to assess credit scores and loan offerings to students. You know, in your view, how can AI-driven models ensure students are matched to the right financial products, not just the eligible ones?
Absolutely right. And though these are early days and the models do take a lot of time and data to get trained and to start predicting the right outcomes. However, it's a fundamentally a big shift and it actually helps compute the application data and information and alternate data and university information, potential job information, income information, multiple variables. For example, at Kuhoo, we run more than 200 variables on every application, right? And that is humanly impossible to run or evaluate when a physically a credit manager is evaluating application. So AI helps to not only match the right profile that your your past accounts actually indicate you are strong in a particular area, but you seem to be choosing a wrong area for your post graduation because you may be actually getting driven by the herd, or it's the maybe the flavor of the season. All your friends are doing it. That's why you want to do it. All of those things can be actually far more precisely predicted and evaluated through AI models and technology and data analytics and advanced machine learning models than you can do it otherwise. So, according to me, another very, very positive big shift, not only for the lenders because they'll be able to predict the behavior, loan servicing behavior much better, but also for students because they'll get the right information at the right time when they're applying to universities. Maybe some of the AI models actually can come back and, for example, I've done more than 30 years of experience, total about 15, 16 years in student lending. So we have experience, physical experience of dealing with hundreds of thousands of students. Now, uh, if I can actually, this is what we are trying to do. If I can actually extract this experience over the years, data, and put it in an AI model and then start training it, it becomes much more easy for our foreign students and parents to understand if they are making the right choices with respect to university, course, country, and so on and so forth, and even the cost of education. What are their career aspirations? They may be aspiring for a career for which they are not taking the right course. All of those things can be solved through these models far more precisely than otherwise.
Okay, okay. So the education finance sector is no more just about disbursing funds. There's a growing demand for consultative advisory support. What role can lenders play in helping students choose the right courses, the right countries, and the right career paths?
If they decide and if they are domain experts, and this is the operating, these two are operating ones. You need to, before advising somebody on something which they will take it to their heart, they will believe it, they'll choose their careers, they'll take decisions which will impact their lives, their parents' life. If you are doing it as lenders, though they are in a good position to do it, however, if you're not equipped, your not, depth of knowledge as a lender is not that uh, strong, then I think it becomes negative. But largely speaking, lenders have the most access to the most rich data about students, parents, their family, their past academic track records, in which subjects they got backlogs, which subjects they have actually excelled. And along with that, lenders also have been actually doing, especially the domain expert lenders who are only focusing on student loans, they have over the years actually gained experience on which country is a good country for what kind of jobs people are getting, which kind of courses are getting better jobs, which kind of universities get better starting salaries, so on and so forth. Lenders have all of these information. So these pieces of information can come together, and if lenders can build models around these information and data which they have access to, along with the experience that they generated over the years, if all of these things can be put together by lenders, I think it can be huge value for students to choose the right course, right university, right country, right loan amount, in fact, and right career aspirations, and so on and so forth. So I think lenders are best placed to do it. However, with a caution that, uh, according to me, career advice should be taken more seriously. Anybody who does it, whether you doing it personally to somebody as a in the family or friends, but if you are doing it professionally also, because people will believe you, and when they believe you, they will choose and take decision based on that. So that you need to be sure that you're giving the right advice, objective advice, you're not getting yourself driven by. So I want to qualify, while lenders are in a good position to do it, I want to qualify this is a complete different business altogether, though it can be married, but it has its own nuances.
Right, right. So, my next question would be about the frequent pressure that our rupee is under always. You know, with the rupee frequently under pressure against the dollar, how should Indian families hedge or plan finances to avoid being caught off guard in the middle of, of a degree?
If at all they decide to go this way of sending their kids abroad, despite all this whatever happening, if we are still going at it, doing it, and you have the right reasons.
Abroad has not, is not on the wane. Maybe people are looking at different destinations, but the aspiration hasn't gone down despite what is happening geopolitically.
Correct. Yeah, that's what I'm saying. So when they're doing it, then it is important to then actually provide and keep kitty available for this almost 10 to 15% or 5 to 15% of range of depreciation. So you should assume that the cost might go up. Or if the cost is, let's say, $100,000 right now, you've estimated for next 2 years, or you have estimated 150,000 for next 4 years or 3 years for undergrad studies, then you should actually provide for 10 to 15% extra in a kitty, which is for the rainy day. When this happens, and there is more likely, if you go by past trends, it is it suggests that it might happen. Uh, then it is important to be ready for that eventuality. Second, it is also important to reduce, change the and ask for uh, right loan structuring. Actually, what happens in student loans, especially, which is very underappreciated according to me, that when you take loan, there is usually a moratorium of principal during the course. So you don't need to pay the entire EMI during the course. You need to either pay only interest income, or in some public sector banks, they give you complete moratorium. However, what happens is, in some cases, this accrued interest during it's not that they're not taking it right now. They'll have to take it, that money, somewhere, right? After you
Right,
pass out.
right, right.
So sometimes this loan becomes much bigger than that you took it for, right? So those are the things which happen. So it's important to structure the loan. If you can, or your family can, in this scenario, if you're going and taking some loan, if you want to start paying EMIs through your father's salary and right now, and not accrue the loan, I think keep reducing the debt burden as you come near to the passing out period from the college. Then it may be a little more manageable when you pass out. So even if you're getting little uh, uh, salary which is not expected, invariably what is going to happen is that you expect some salary, and maybe in most cases those salaries will be much lesser than what you expected that you will get once you pass out. So you are planning based on X salary, and you are now getting X minus 20 or X minus 30% salary. That means you need to also provide and expect that I'm going to get X minus 30% salary. So those are the things they can do to hedge against this uncertainty about rupee depreciation and even the cost of education going up or cost of living also. It's not only depreciation but also cost of living going up. So inflation is much higher in foreign countries, and living expenses have gone up drastically. So that also you need to provide for and do an actual and very, very careful calculation.
Right, right. See, student loans have become increasingly accessible now, even through digital platforms. It's just a click away, you know, in many cases. So, what safeguards or support systems would you recommend for study abroad as aspirants to prevent overborrowing and promote responsible decision making?
Look, easy credit is psychologically, philosophically, easy credit is always encourage people to borrow more than they can service, always. But parents and families and student themselves need to be very, very mindful of the fact that parents are not taking decisions for not only for themselves but their kids. So they need to be responsible. Look, debt, uh, when it is easy, uh, it is even more important to discount it by 20%. Say, if I need 100 rupees, can I do it with 80? So those kind of decisions delay the gratification of jumping and saying, okay, my eligibility is 20 lakh rupees. Let me take full 20 lakh rupees. Why I only need 15? So those kind of decisions need to be done, and discipline needs to be maintained. Uh, Easy accessibility does not mean that you won't have to pay it back. In fact, it's the other way around. Easy accessibility because of technology and access to information and credit bureau. Uh, Parents also and student loans, because invariably this is the first financial product they take, they don't realize the impact of negative credit bureau not only on their future borrowing or future financial product purchase, but also on their employability. A lot of employers have now started pulling credit bureau report before hiring anybody. So if you are taking more loan and they are not able to service and they default and their credit score starts going down even at the start of their journey, corporate life, which is about 30, 40 years, 35, 40 years, and at the only start only your credit bureau actually goes down. It is very underappreciated by students because they've never had this financial literacy, or nobody ever told them that if you don't pay, it's very frivolous for them. If I don't pay 3 MI or 4 MI or 6 months, I'll pay back later when I get money. All of these things have more implication than only economic implication. You might not actually get a job itself actually, because some employer might decide to pull a credit report before hiring you. And especially if you're joining financial services, some of the financial services companies actually think that if you are financially responsible yourself, then only you'll be able to service customers responsibly. So those are the things which are important. So advent of credit bureau also has put more focus and spotlight on student needs, need to and families need for discipline around this. Accessibility has become easier, which is great because a lot of talented students were otherwise dropping their higher education dreams because they were not having money. So easy accessibility is a double-edged sword. It actually helps to pursue your dreams if you are talented, but it also comes with a lot of responsibility that please do not over borrow. As much as possible, try and fund it. It should be only a portion of the total cost. While a lot of lenders are offering 100% of education, for example, in Kuhoo, we actually advise students that though you are eligible for full loan amount, we will advise you to actually exercise caution and take as low as possible so that when you pass out, you are not under tremendous pressure to get X amount of salary, correct? Or actually go to your father who is almost retiring or retired and ask for money from them, because now they need to post retirement, they need to manage their own lives, right? So those are the things we advise students. So lenders should do it, students, parents should do it. It's a collective responsibility of everyone. We actually also have now starting very soon a financial health report for every applicant actually. So we will give them a financial health report that this is your financial health and these are the recommendation by us whether you take loan from us or not. So those are the responsibility we are taking on our own to evangelize.
Right, right. So, looking ahead, Prashant, what are some innovations or regulatory shifts that could significantly reshape how Indian students finance their education abroad over the next 3 to 5 years?
So government is doing a lot of things actually. A lot of state governments and central governments are coming up with subsidies or interest subsidies on loan for especially for the meritorious students and all that. I think there is a lot of scope to do some kind of subsidy for need-based students also. Those are also available. What governments can do it to make it easier for them to access. A lot of information asymmetry is there. While the schemes are there, but a lot of students are not available. So governments and lenders can work together and then use lenders distribution system or lenders infrastructure to actually deliver these schemes better. So they need to work, they can work hand in hand to ensure the execution of these schemes, which are intentioned schemes by the government and good policy, actually does not get delivered fully to the students because of execution gap and bureaucracy or the processes are very cumbersome. So that is one. I think also the corporates can play or employers who are potential employer of this talent pool, right? They can play an important role in doing it. Right now, the responsibility seems to be only on government and the students and maybe RBI and the financial ecosystem. But eventual beneficiary of a good talent pool, qualified and skilled talent pool is also the employers who are anyways doing a lot of spends on their learning and development program. When they hire somebody from some school, they need to go and train them themselves. So those are the if some portion of their learning and development budget, if they start working with lenders on some of the risk sharing models and all that, and very specified courses, very specified skills, I think that can work wonders because then entire ecosystem is working virtuously to make the entire model very successful, and the students in the turn and families, everybody gets uplifted and wins.
Understood. Prashant, thanks a lot for joining us today and sharing your valuable inputs, insights, and suggestions with us. Thanks a lot for joining us.